Hello. Hello.
I think being in Paris, I scarcely need to introduce Patrick Pouyanné, but he's the chairman and chief executive of Total. Why don't we jump straight in with some questions? Fatih Birol spoke here this morning. Some of the news was that he almost jumped the gun on the World Energy Outlook due out on November 16th when he said that their calculations show that even if the automakers were to start selling half their cars as electric cars beginning next year and continuing for 20 years, oil demand worldwide would continue rising because of strong demand from aviation, trucks, and petrochemicals. Is that also your impression that this recent proliferation of electric cars, whether it's 1% now, whether it's even 20% in a few years, is that really going to make that much of a difference for oil demand?
Just first, I think it's probably this year, from this point of view, a lot of people have changed their mind about electric cars. It's a sort of pivotal year because we all observe that, in particular in China, there is a big push for electric cars in big cities, mainly for local pollution, for health, I would say. And I see a lot of Chinese car manufacturers becoming stronger and stronger on that. And I would say in the mindset of the executive committee of Total, we have changed our mind about it. I know that a few years ago people were saying, no, it doesn't exist really, it's hybrid vehicles, big complex. I think the technology are progressing quickly. And just to illustrate an answer to you, you have to know that in the oil demand today, half of it is for transportation, only half of it, 50 million barrels of oil per day out of 95. And out of this transportation, light vehicles represent half of this half. A quarter of the world oil demand is for light vehicles. That's the reality today. Imagine that today, electric vehicles, I remind you, is 0.5% of the world production, 0.5. But imagine I subscribe to that assumption that in 2025, 8 years, 10 years, a third of the light vehicles are electric vehicles, a third of it. It's not impossible because electric vehicles will be mainly for urban advantage, so cities, big cities in the world, let go a third of it. That means a third of my consumption will disappear, but to disappear a third, you need to replace the fleet. And to replace a fleet of vehicles, you need 8 to 10 years. So that means that if we have a third of light vehicles being electric in 2025, which is an aggressive assumption, a third of the consumption will be eliminated of light vehicles in 2035. So in 2035, you will have around 10 million barrels of oil per day would have disappeared. 10 million barrels of oil per day compared to 100, growing at 0.5, 1%. So it's not a system, it's important. It's important. It will participate to a potential of, I would say, peak demand of oil or stable, not growing the demand, but it's not systemic. Having said that, it's an important factor that we need to take into account. So I don't know, I'm just making a little math, but I think it's important just to have the people have the magnitude. Because what is clear as well, and Fatih Birol is right, is that today we didn't see really the same effect on trucks. Gas could be an alternative fuel for trucks, but it's still complex to fully imagine the full system. And for planes and for air transportation, it's even more complex today. But okay, that's a reality that we need to face, and it's a possible transition that oil and gas companies like Total have to have in mind.
Okay, thank you. That's a clear analysis. What about solar? We've seen a real decline in solar panel prices in the last several months as there have been some subsidy cuts. You're very active in investing in solar. What is there a market signal we're getting from this decline in prices?
I think the solar industry, we know we are a big investor. We are the main shareholder of SunPower, which is one of the largest listed companies in solar. This solar industry is facing again, I would say, a new winter, a new cycle going down. It's an infant industry. And every 2-3 years you have a cycle. We had a very bad cycle in 2011, 2012, with a big oversupply around the world. Then 2013, 14, the demand for solar, for renewables was accelerated because you have countries like Germany, like the US, like some countries, as well as China also, has very aggressive policy in favor of solar. And what happened in the last year is, and I need to send a warning today to everybody, is probably because people have seen that there is this type of tenders that my colleague Renal was mentioning, very aggressive tenders, people going down with very low prices, which frankly, when you see a price under 30 cents per megawatt hour, I don't understand. It does not cover the amortization of any investments. It's a pure cash cost future vision. Okay, there is a vision for the future, it's good. But you know, you don't have today a single solar company making cash out of the business. And we have to be careful, because what I observe is that governments around the world begin to decide, okay, we have supported these renewables. We don't need maybe to support them anymore because we have budget issues. So we begin to diminish the policy in favor of these renewables. It's probably too early. And today, this segment is facing a double crisis, a crisis of overcapacity and a crisis of not enough demand. Because in China, by middle of the year, they have changed the policy of feed-in tariffs, lowering it. And because surprisingly in the US, the Obama administration, the Congress have taken a very good decision last December by renewing all the tax incentive system, but the impact on the demand was not good because people decided, okay, we have 5 more years to benefit from this system, so let's relax. And so the anticipation for high demand has been, unfortunately, not met this year. So this industry, which is again still an infant industry, we don't generate today cash for solar in the solar industry. This is the reality. So we have equity people, like, shareholders like Total, and I'm there for medium and long term because I believe we have to participate to the transition. And I consider in the business model of Total that, yes, I generate $20 billion from oil and gas today, and I can reallocate part of this $20 billion for preparing the future for my company because it's part of the future of energy. $1 billion. This year it will be in fact a little more than 1 billion because we acquire an energy storage company, Saft, and we invest in sun power. But we have also to find a way to have these businesses being profitable. You know, I always say the sustainable, when I speak about sustainability, what is sustainable is profits. You will not be a sustainable business just because it's green. I love that, just because it's good for the climate. You will build it because it will be profitable and because economy meets ecology. This is how ecology has always progressed in the past. You need to find people, investors, who will continue to invest, benefiting from a global environment. So solar is a great industry. Big efforts have been done in terms of technology. Yes, we lower the cost, but be careful. Today, there is a huge overcapacity, and you have players who put price on the table. They are not able to generate cash flows out of that, and not able to amortize on the investments. So an industry which is only making return off during years, it's not sustainable.
Is part of the problem in solar the extent of manufacturing subsidies, particularly in China, which has made it harder for those companies producing in Malaysia and elsewhere? We've heard the argument from some that those subsidies are wonderful because it's reducing production costs and it's doing something for research and development. But does it then discourage longer-term investment because you never know when the Chinese are going to put another $1 billion into building another overcapacity plant?
But I mean, you know, we should. It's good that you have policies in favor of renewables around the world in China. By the way, you know, we have put barriers in Europe, barriers in the US against the Chinese producers. The problem is that they have built the plants outside of China, and so today they are going in the country. So all that is absolutely not efficient, to be honest. And people who think that you can, today in the global world, fight against low-cost producer by putting barriers, they just demonstrated in 2 years, 3 years, that all that policy is down. So I think we must go for competitiveness. We must also ask people to bid and to reflect in their prices the full cost. If we have an industry which is just being developed on the idea that you don't put into your prices the cost of your investments, you will have an issue one day or the other, and the investor will begin to be tired.
Okay. Mark Carney, the governor of the Bank of England, has made headlines by giving a couple of speeches now, arguing that there is a risk if the world moves very quickly to address global warming, that we'll see a lot of stranded assets, that we might see sudden plunges in equity prices, in bond prices of fossil fuel companies, and potentially that this could even lead to systemic stress on the financial system. Do you buy that argument?
I would love to be Total to be a systemic equity. I'm afraid I'm not. No, frankly, I think there is a big if in that statement, which is if we go very quickly. You know, I think energy is a very serious matter. It's vital for all our economic and also all our life. It's vital. People, when you enter in this room, you want to have lights immediately. And let's be serious. There will be transition. There will be an evolution. If you take 200 years ago, people were using wood, then we go to coal, then we go to oil, then we go to gas, we'll go to renewables. But people forget the timescales it's required. Yes, technologies are progressing, but a world without oil and gas immediately is not possible. And it's not me. Look, all the predictions given, even if you want to be on the 2-degree roadmap, and Fatih Birol was there. You know, in Total, we have decided that all the strategy, we have all my top executives are on their desk, the IEA scenario, which is fitting with the 2-degree roadmap. In this 2-degree roadmap in 2035, in 2040, you still have oil and gas for 40%. Of course, you have less coal, you have more renewables, but we should not antagonize. There is a time scale that we need to take into account. The second remark to Mark Carney is that when I see the value of Total, I would love that my company would be valorized on the full resources I have in my portfolio. Unfortunately, it's not the case. It's valued about the next 10 to 15 years, in fact. So I don't think that anything is systemic in that story, and I fully disagree with what he said. I think that what is true is that we need to integrate climate into our strategy, and we have issued a report in Total this year about this thematic, very seriously. We want to have a gradual decrease of the CO2 content of our production mix, which we'll deliver to our customers in line with this roadmap, which means less oil, more gas, more renewables. Yes, that's true. But speaking about dramatic effects, frightening people will just antagonize the players, and we should not antagonize anybody. What we must do is putting people together. Climate change is a global, serious matter. We need a collaborative effort. And it's not by antagonizing people against oil and gas companies or coal companies that we will progress. We are the engineers. We know the energy. We are serious people. We want to be responsible. And the right policy, the right strategy for me is, like we try to do, to invest part of our revenues coming from oil and gas to invest in the future of the transition. And when Total decided to put $1 billion to buy a battery company, we prepare the future, and we will become a serious industrial player in that field, and we will see how we can profitably continue to grow that segment for the future. And I think it's more realistic to find a way to collaborate rather than antagonizing people.
Okay, we're going to go to the audience in a moment here, so I wanted you to start thinking about your questions, but not just yet. We got one more that I'll ask, and then I'll go to you. And that is, Fatih Birol also said today that the IEA's calculation is if you add up all the commitments that have been made under the Paris Agreement, all the national commitments, even if every single country complies with them, we're still going to get a 2.7-degree increase. Is what Total is doing, do you think that is consistent with a 2%? Because that means almost implicitly that you'd be going beyond the countries in which you do business.
I mean, what Fatih has said is true, and everybody knows. But having said that, I think this agreement was really an important milestone. There will be a before Paris and after Paris. I think this is a new type of diplomacy where you try to engage many countries into a collective move where you put yourself some targets, you have to report on them, and so there will be countries who will fit the target, some will not fit, and then you will improve the target, and the program will improve years after years. I think it was really this idea of the Paris Agreement was new in the international diplomacy, geopolitics, and I think it was a good idea to try to progress because, again, it's a matter of taking actions even if you don't think you can reach immediately 2 degrees. It's like in Total, when we have the price going down from $100 to $50, I ask my companies, my people, my colleagues to cut the cost down by a lot of billions of dollars. The first target I gave them was 2 billion. I knew that we had to target 4 to 5 billion. If I had told them I need 4, they would all have given up. It's not possible. We cannot do it. 2 billion, they've done it. Now they've done 3, and there will be 4. It's a matter of engaging the people and committing the people. For Total, whatever the countries are doing, we are not a country, but we have our own strategy. The strategy for the company is to continue to be one of the major energy companies in 20 years. And to do that, we have put a framework, as it has been analyzed by some external experts. If our production mix is going from where we are today, which is more or less, I would say 55% oil, 45% gas, and 5%, a little, 2% renewables. If we move that mix to something which will be 40% oil, 60% gas, and 20% renewables, we will be exactly on the 2-degree roadmap, like as said by the IEA. So this is a type of pragmatic things. It's ambitious. I hope we will be able to develop that segment in low carbon business, which is a mix of solar, of energy storage, which is absolutely key, we'll see if it has to be profitable. We are committed to that. It's a global ambition for the company. But I think this is a type of pragmatic industrial vision we need to have. And from that point of view, I think we can be considered as being responsible and participate, and not only participate, being active and benefiting, because for me it's not a constraint. It should be an opportunity for the company. We are a major energy company, number 3, number 2 by results today. I want to continue to be there in 20 years. I will not be there myself, but my successor will be there. And it's part of the journey that the company wants to follow.
Thank you. We have a question back here. If somebody could please give her a microphone.
So thank you for the presentation. Today, the CEO of IKEA raised a very interesting point. So he said that they started shifting from retail to energy by selling solar panels. So to expand on the question that I already asked you at the Oil and Money conference about Total and its diversity strategy, I would like to ask whether do you think that energy companies can diversify their business strategy by uniting their expertise and R&D and by going into the large-scale consumer goods market? And I'm actually asking this question because I also participated in Total Summer School, and we were given this nice solar panels as a present, and we could charge our phone with it. So do you see any B2C solutions and a niche for these kind of projects? Thank you.
Yeah, it's an excellent question because it's exactly what we want to set in the future. We think, yes, that we have to, it's back to, by the way, we are an oil company. In the oil business, we have developed a company which is fully integrated, from exploring, transforming, down to distributing, going to the customers, delivering oil products everywhere in the world, in particular in Africa. In the gas, we want to have the same strategy, which is going down to industrial customers, I would say B2B, and even we just acquired a company to do some B2C. And it's linked to somewhere, what do we want to do with solar? We are not, of course, we have acquired, we are a majority shareholder of C.E.O, which was an equipment company, which was a little strange, but with the idea that we will go from there downstream to producing energy. And one way to do it is what you said, is to be able to distribute these solar panels, to combine there, by the way, with batteries. It's why we bought also a battery company, in order to equip some industrial customers, some business customers, but also some residential customers. It's a huge effort. You need to have, of course, the customer's access. It's expensive. One of the key issues is that if you want to equip today a residential customer with solar panels on their roof and a battery, it's around between $20,000, $30,000, let's be clear. It's expensive, so it's back to financial capacity to lend the money, lease, loan, which means that you have to find a business model like the car manufacturers, with their banking system, lending system. Sometimes, and frankly, when you have a company like SunPower, they are not able to do all that today because they are too small. So this is where larger corporations like Total can have a place in this picture. So yes, we have that idea in mind. Will we be successful or not? It will be, the future will tell us. But it's a lot of things but let's be clear, for me, we cannot be a major energy company with only producing big amounts. We want to deliver this energy to the end customers. You know, when I became CEO of Total, people in the Swiss did not know me, but when they recognized me, they were speaking to me about my petrol stations, not because of my big platforms in Nigeria. They don't know what I'm doing. What they understand, my utility, my social utility is delivering energy to these people. And so we need to do that in our various segments. And by the way, economically, we're integrating along the chain. It's why today Total has been more resilient by most of our peers, because we benefit from the full value of this chain.
Thank you very much. That is a very clear and comprehensive overview. We really appreciate it. Thank you. And with that, I'll hand you over to my colleague, Liz Alderman, to talk about catalyzing capital. Thank you.